normal time for us to share knowledge. And today's topic is 2023 tax planning. So you may be wondering that why 2023 tax planning? Every year when you do taxes, when you conclude the year, and our firm, we believe that tax planning is a healthy lifestyle. It is not about a homework. It is just part of you eating and sleeping, and just add one more thing in there called tax planning. And you may be wondering that, well, why? That's not my priority. Maybe it is not your priority because your wealth is not there yet. But it will become your priority when you start writing checks for $100 million taxes. That's when you will feel like, it's time to meet with Ying and figure out the tax planning for 2023. So today, let's get going. And in our preparation, remember when we start our webinars, we always brag about our YouTube channel. And this is our YouTube channel. And you should just go on to Community CPA, subscribe to our channel, so everything we talked about will be in there for you. If you check on live, and it will show you what's going on right now. And if you go on to home, it will lay all the videos for you. And if you click on the magnifying glasses and you're just typing it in, goes foreign, then all the foreign related information will come up. So this is one way to tap into the knowledge we have. And also, you can also go to our website, communitycpa.com, and to see our appointment. We only listed partners as the people you can book appointment. These are partners. If you go to communitycpa.com appointments, you'll come over here. Of course, on our website, that's the button on the top and show you can make appointment. If you click me, then you will see all the available time, available date, and so what day I have, it will tell you. I know you are wondering, what do you mean you don't have any time between now and till Saturday and next week? And trust me, my calendar gets filled up 2 weeks ahead of time. The only drawback with my service to you is that I normally cannot respond to you so quickly. If you want to meet me 1 hour today, you call today, it is so hard to be able to do that, but sometimes I do. Sometimes I get lucky because I finished my appointment early, or my appointment didn't show up, then you are right there and I see you. So that is something just want folks to know, not to say that this is some features we have, but just tells you we are very desirable. People want to get to our calendar to know what we are doing. So 2023 tax planning. And with that, I want to introduce myself to you. And I'm never tired of saying that because a lot of times, almost every single time when I get online, there's new people I have never seen their name before. So my name is Ying. I am the CEO and managing partner for Community CPA. In another word, I'm pretty experienced, and I'm also the initiator, the founder of the company. And with my experience for the past 27 some years, and I have a track record of doing good work. I have been on the National Taxpayer Advocacy Panel, the advisory committee to IRS for 3 years. And I also wrote my own book in 2019 that is called Appointment with Ying at 8 a.m. And of course, I actually bought my book here. This is the one, 8 a.m. That's just my working book because I keep on making changes to my book. So that's the first book. And the second book is also here. And you see I have all these tabs because this is the sample they just sent to me. Publisher sent to me, asked me to okay that. And this is my second book. I just wrote it. I finished writing it in February this year. So it will be published this year for sure. The 2 books I wrote, one is to how you start a business. The second one, the one with the green dress on this one, is how to grow. I purposefully did green because green representing the US dollars, right? Our dollar is green. So I think to grow business has a lot to do with grow money on the tree, right? So we all want money to grow on the tree, but it never did. What if you just be so brilliant? You can do that on your own, and with some tax planning techniques that we can offer you. And no disclaimer, no responsibility disclaimer, just to say that the stuff we talk about here, it is something general. To apply to your specific situation, please come to us. Come to communitycpa.com, make appointment, and ask question. I will tell you that I have every day, I have people booking my time and asking questions. And I have never ever disappointed anyone. So whoever comes to ask me questions, and I am surprised myself as well, I normally can answer the question very comfortably because I know it. And is there gonna be a day I don't really know how to answer your question? I want you to challenge me. So far I have not run into that situation. So I am pretty versed with what's going on out there. All right, when we talk about tax planning, 2023, I want you to look at this three-dimensional cube that we have in front of you. And I know that fiscal year, is one aspect of the cube. Accounting method is another one, and tax structure. And with less than 30 minutes now under our belt, and I will focus on tax structures today. And the fiscal year accounting method are also tax planning techniques that you can use. But let's just kind of dive in a little deeper to tax structures. So what is tax structures? Is that has anything to do with the company I formed with Secretary of State? Yes, it has everything to do with that. Because when you form a company, you basically already established a tax structure. So if you formed LLC, your initial tax structure is LLC. It doesn't matter later on, you elect that to be an S Corp, and then you elect that to be a C Corp, or you just make a disregarded entity, however you are doing it. And your initial born is a LLC. So a lot of other related laws and regulations were coming in based on how you were born. Just almost like if you were born as a girl or boy, and that is genetically decided, right? So you are that way. Then later on, whatever you choose, that is in tax world, is an election process. So, I wouldn't say that sexual orientation is an election process. That said it too lightly. That's not the case. But it's sort of mirror that process, right? You are born as an LLC, then you can do your tax structure election to make that to different way so your tax can be done differently. So with that said, let's look at all the tax structures, right? And we have the following tax structures are most common for small businesses. We put that most common because that's not all. That's really not all. There's a co-op you can do. There's a B-type corporation you can do. So we're not talking about that. Right here, right now, we just talk about sole proprietorship, LLC, and the S Corp, C Corp, and not-for-profit organization. So those are most common for small businesses. So you may say that, oh, Ying, I don't agree with you. And look, not-for-profit is big. It's not for small businesses. That's not true, folks. If you're running a business and you want to do something contributing to the community, that is not a vehicle inside of your company, and you can create a nonprofit to fulfill that goal. And one good example, folks, ladies and gentlemen, and with Community CPA, if you hear about us, you probably also hear about Immigrant Entrepreneur Summit. That is a 501c3 organization, was formed in 2008. That organization does education to immigrant business owners when they start business in US, and we want to teach them in one day. With 23 classes inside of that one day, we gave a crash course for people to graduate from starting up a business. So that is nonprofit. Community CPA has been putting in money and people into the nonprofit to grow the nonprofit. Of course, there's other major funder as well. Wells Fargo, for example, has funded that since the beginning, US Bank. So we have a lot of businesses, a large business, and coming in to back this effort. But you can see Community CPA is a small business. Of course we are. We started from one person, one client. And my annual income back in the first day of 1998 was $600 a year. Okay? That is how much a company was making in the initial time. So with that said, we are a small business, but we also have this big heart. We want to help community, so we set up the nonprofit. And IES, of course, right now IES is managed by the board, it's growing on its own, but it's always some sort of pride deep inside of me because I am one of the 3 funders to that nonprofit organization. So with that said, come back to our concept of structures, right? So it is a small business's tool to set up a nonprofit. And also you can do a LLC, be a one-member LLC. That is what? That is sole proprietorship, right? That is a disregarded entity, and you go into, just like a sole proprietor schedule, report your taxes in Schedule C. That is under 1040. So that's your sole proprietorship. Your LLC just depends, right? Your LLC depends on it's one person or multiple people. Then you would file partnership tax return. And remember, partnership tax return is a little complex because you have distribution dollars. You also have a guaranteed payment. You also may have the profit sharing. And so this whole partnership and by itself need to plan. Sometimes it is good for partnership, sometimes it's not. Example, I have so long ago, we have a couple who runs hotels across the country. So every single hotels were LLC. So it's a husband and wife, both members. So they set up one LLC for this hotel, the other LLC for another hotel in a different state. So when they first came to us, and I look at the LLC, I noticed that both husband and wife are active members, means that they are actually receiving the profit sharing, then they pay Social Security Medicare on that distribution. So I, curious. So I asked the lady, because the hotels is all over the place, right? So I know they live in one state. And I also kind of got the impression that the lady actually doesn't get involved with the business because she has like 3 dogs and 2 cats and a home and 2 kids. I don't think she will be a full-time employee in the partnership. So I asked her, oh, how do you help your husband? She goes, what do you mean? I said, well, did you go to hotel help your husband with your business? She goes, no, I don't even know these hotels because I never go there. So what does that mean? That means under this LLC, she should have been the limited liability partner, passive income. The husband should be receiving guaranteed payment and pay self-employment tax. So really, she should not be paying self-employment tax all these years. So we make changes, of course, make it right? So after we make that change, do you know how much taxes she was actually saving out of all these hotels? Altogether is $60,000 tax saving. So this tells you that LLC, the structures is a big deal. And you cannot think of companies, just companies. No, every company has its special ways to handle the tax situation. If you have an LLC, if you have a partnership, folks, you probably haven't even dived into how that impacts your taxes yet. You think it is just a K1. It's not the same thing. Okay, and some people think that, I got a lot of money out of the K1. I got this 30,000. I also have a profit sharing of 5,000. And no, your 30,000 is not even what you got. It is a return of capital. That's what the money you put in and you took it out. And of course, it's not taxable, but it's not your earning. So there's so many things that within LLC you want to learn and know. And just make sure that when you set up the structure, you ask that good question, whether this is fitting your business or not. Very important. And sometimes people set up an LLC because that's what the law firm told them, okay, let's set up an LLC. The lawyers at the law firm, they set up an LLC for a very, very good reason, because the LLC is cheaper, and the LLC also has all of the state laws in protection. So those lawyers, they are in the state, so they can take care of you for this state. So side of compliance. Then also, to save your money, they want you to pay less and get your company going. And it's also protecting your liability already. So why not? If I'm an attorney, I can imagine that I would want that to be done. And then, but what they didn't think of is once you set up an LLC, you could be making $200,000 profit. If you make $200,000 profit and you pay self-employment tax on it, is 15%, that would be a lot of taxes to pay. But if you elect that to be an S-Corp, then you go away from being taxed on the distribution with self-employment tax, and so you actually can pay yourself a reasonable salary and then take the distribution home without incur Social Security, Medicare. So that's why there's a lot of small businesses, they are S-Corp. Not because S-Corp stands for small corporation in my world. S-Corp stands for Socialism Corporation, and the C-Corp stands for Capitalism Corporation. Let me explain more. So why do I say S-Corp is a socialism corporation? Because S-Corp is designed to level the wealth. So S-Corp says that if you have 5 shareholders, depends on the percentage of shares, you share everything equally. Cannot be like LLC where you can actually set up structures to, if I have profit, we share 90%, 10%. If I have a loss, we share 10%, 90%. If I have equity, it's 50-50. So LLC is so flexible in that, but S corporation, no, it's a straight down on the cookie cutter. So if you're 5% shareholder, you only just get 5%. If you're 1% shareholder, you're only gonna get 1% of the gain, 1% of the loss. Everything is just cut on the 1%. So the S Corp, for that reason, and the S Corp want to make sure that the people you hire also are really being treated the same. So for example, if you want to implement health insurance for yourself, because you are the S Corp shareholder and you want to get yourself health insurance, and you are like, no, I don't want to give anybody else in my company, I'm just gonna do it for myself. If you're doing that, you cannot write your health insurance expenses out of your S Corp, because your other employee did not entitle to that. So that would come out of your 1040. You will move that money to the 1040, so you cannot deduct that out of the S Corp. And however, if you give that same benefit to everyone in your company, and everybody is in a cafeteria plan, so we all can drink coffee out of the company kitchen, then that's when you can deduct that as a business expense. So with that, did I give you kind of a sense about S Corp? That's why I say that S Corp is a socialism corporation and meant to level the wealth field. Okay, the C corporation is different. C corporation is capitalism corporation. That means that it's only benefiting the shareholders. So C corporation, just like those public traded company, and the shareholders, you buy their share, you're entitled to their dividend, and you can inquire of how they are doing, because their job is to maximize your investment. It is not the public per se, it is you, the shareholder. If you are a majority of shareholder, you can imagine that everything is going to be around you. So the C corporation, because of that agenda, so as long as it's past the board, the board is the people who come together to manage the company. Sometimes it's the owner themselves, sometimes it's the major shareholder with the minority shareholder and with other people who cared about the company and come together as a board. As long as it's past board resolution, then certain benefit can be inserted in there and becoming the company expense. So with that said, the C Corp really is focused on capitalism, capitalists. And this is where when Sanders was running for president, a big part of his agenda, it was to reorganize and fix the C corporation. And that probably one of the reasons why he wasn't elected, because the powerfuls, the mighties, the richest, and they have those C corporations, and why would they want to do it any different than what is going on right now, right? So with that said, the C corp is the way it is, and it's very manipulatable in terms of what benefit you build for the owners and for the board or for your key employees. And with that, C corp also bear another benefit which is really significant. That is to say that it does not relate to your 1040. So you can run C corp separately without affecting your 1040. You don't have to wait for K1 like you wait for LLC and S corp, right? So C corp, you know, you can just let it go by itself as long as you don't distribute dividend. And if you made a payroll for yourself, W-2 would already be with you, and by the end of February, so you have that. So you really don't have any need to delay C corp. If you have a C corp, to delay your 1040 filing if you have a C corp to be your company. But you may say that, well, Ying, I know, you know, the people say that C corp has a double taxation, so that's not good for me. I don't want to do C corp. You know, that is old news. And have you ever go on internet to look at the news, you were like, what? Really? Then you look at the timestamp, it's like 5 years ago, right? Did that happen to you? That happened to me. Sometimes I look at something, goes, oh really? Wow, oh really? Then I look at the time, it's expired. So, so the same thing, double taxation basically is on the surface, it is the case. So because you pay the corporation tax 21%, then you pay yourself dividend, then dividend came to your 1040 and you need to pay dividend tax again. So that's what they call double taxation. But the reality is, and whether you distribute how much of a dividend and what kind of expenses you're going to build inside of C corp, it is really done by you before you pay taxes. I would say that most of our taxpayers are very good at paying taxes because we have already gone through all the possibilities and all the thinking and about how we pay taxes and what should pay taxes, what can be a tax saving by certain investment. We already gone through that in October, November, December before we roll into a new year. So with that said, I don't think that's a valid point about being afraid of double taxation. I think the valid point is if you don't want things to relate to your 1040, say if you are, if you are getting ready to file divorce with your spouse, and if you are involved in certain litigations that they are focused on your 1040, or maybe you are applying for certain loans and your 1040 is being used. So there are so many reasons for people to not want to get business involved. Then in that case, C corporation is your ideal solution. Of course, the C corporation also offers another benefit, which is to allow you to fix your year, not from January to December, but from any month in the year to the next year following. To next year's, the 12 consecutive months goes to next year. So for example, if you are running a construction company, you make most of the money in the summer. So October came, that is really the end of the time you collect the money. So you don't want your money to be collected immediately, pay taxes. So I would want your year end to be like, after I collected the money, give me 6 months to spend. So that means you will be ending your corporation in April. So you will start in May, ends in April. So the money making you have in the year is kind of right in the middle, allow you to make money and spend it at the same time. Then when you file your taxes, it will be properly reflected your business cycle, right? So those are the things you can consider. And of course, I touched on the nonprofit already. So these are the most frequent seen small business used tax structures in the United States of America. And the next thing I want to show you a map. I know this map is kind of light, but I still think that you can see it. I want to summarize what we talked about right now. For today's topic, we talk about tax structure today. So I kind of run around and I told you all these structures, sole proprietorship, LLC, S Corp, C Corp. But I want you to visually see them on the map. So above the dotted line, those are what we call the pass-through entities. And you see that Schedule C right there in the 1040 right here. That Schedule C in 1040, that is sole proprietorship. So you file your 1040, you need to put your sole proprietorship business there. Then of course, there is an LLC, also use Schedule C, but they're a single member LLC. You can see that this LLC has a dotted line to the right. It can be elected S Corp, C Corp, LLC 1065. You see how the LLC, single member LLC can evolve to be all of that. So don't trust the people's business. Oh, you know, my friend, he has an LLC. Why he has this? You don't know what they elected to be, okay? So don't judge a person by their dress code, right? So they may dress like a beggar on the street, but they're actually billionaires. You know, I saw those TikTok videos like that. Man, then I'm like, how could this billionaire even have time to dress like a beggar? I mean, I'm certainly not a billionaire. I'm already don't have time. Maybe when people has a lot of money, they have a lot of time too. I've never met one like that. So I don't really know how to imagine that. So you can see that S Corp, right? It has a dotted line. S Corp can revert it back to C Corp. Okay, so, you know, I can take away my election. I don't want to be S Corp anymore. I want to be C Corp. But if they are S Corp, they have this K1 pass through, right? Same thing with the LLC. It's a multi-member LLC in this case. So you have a K1 goes to this members 1040. And of course, the multi-member LLC is capable of to become the S Corp, C Corp. In fact, if you take away the other member, you can become the single member LLC, goes back to your 1040 again. So these are the relationship between the entities. And then look underneath the dotted line, folks. So I have two entities there, C Corp and nonprofit. And the reason they are separate from the above is because they do not pass through. They do not commingle with your 1040. So the only thing that goes to the 1040, folks, you realize, is in C Corp, you could issue a W-2 to the owner, and you could issue dividend, 1099 dividend to your owner. So this is the only schedules that you can create to pay to the 1040 owner, which is the shareholder of the C Corp. That's how it gets passed into 1040. And both of these are due in February. So normally 2023 W-2, and the owner for sure will get that by February of 2024. Nonprofit, the only thing passed on to 1040 and to the individual would be the W-2. So maybe you are a business owner, you and your community members formed a nonprofit. And then the nonprofit will have to pay someone as executive director if they have fundings and activities all planned out. So you would be getting a W-2. Then of course you're gonna report that onto your 1040. And a lot of times the nonprofit really doesn't give any money, but they suck money out of you. But knowing that because it is a nonprofit, the money you donate to nonprofit has what? Tax deduction benefit, right? It's a donation. Right? So don't forget, and you can pass on money to the nonprofit from any other entities, from your S Corp, from your LLC, from your C Corp, just anywhere, they all can donate. So that is the beauty of United States America. We have this nonprofit structure readily for us to use, and anybody, anything can donate into the nonprofit to make the nonprofit survive and thrive, right? So with that said, I hope that this short 30 minutes brought you some new realization about business structures and tax structures that once used to be something you don't know where to begin to think about. And now when you think about this, I want you to picture this picture. If you watching us on the phone right now, you snip a picture of this chart, it is going to be so useful to you when you always, look at the structure, understand where you are. And when we do tax planning, we actually chart out the relationship for the business entities of that taxpayer. So that chart we have is genius. It is something that really make complex issues simple. That is what we are for. So I hope that you are intrigued with the tax planning ideas I give you today, and call up Community CPA, schedule your first ever tax planning appointment with us, and you will see the difference. All right. Our last slide is just to tell you who you email that to if you have good ideas for me to talk to you about. And we open Monday to Saturday, and we do have 2 shifts in our firm. So some people work Tuesday to Saturday, some people work Monday to Friday. So you always will get hold of a live person on Saturday when you call. Okay? I know business owners are busy, and our audience are small businesses that is our lifeline. And it is the most important things in your life. It is the most important things in my life. So we want to be able to tap into the resources anytime we want it. So we have Saturday carved out for you. Saturday is the day that we're always open. And our office hours is from 8:30 to 5:30. Keep that in mind. After office hours, if you email us, we never miss your email. We will take care of you. We are not the firm to tell you that, oh, you know what, sorry, we are too busy. No more room for you to come in. We always in the expansion mode. So whenever you need help, you can look into us. We are growing and continue to grow to be one of the significant CPA firms on the market, and to really educate and support small, medium-sized businesses. So I hope this short talk make a lot of sense to you, and I will be seeing you soon on my Saturday webinar.